Good morning, everyone. Oh, I started the recording. Good morning, everyone. Thank you, Nicole. I'll actually pass the mic first over to my colleague, Andrea D'Souza.
Perfect. Thanks, Natalie. Thanks, Nicole. Hi, everyone. Good morning. Thank you so much for taking the time to join us
Good
today.
morning.
I'm Andrea from Filer Law. We're really excited to have you all here, especially given how relevant today's topic is in the current market. Before we get started, to keep this comfortable and interactive, I would like to add a quick note on questions. We'll be collecting them in the chat as we go, so feel free to drop them in the chat anytime. That being said, I will now hand the microphone over to our Chief Legal Officer, Natalie McFarlane, who will be walking you through everything in detail.
Thank you, Andrea. Good morning, everyone. I'm Natalie McFarlane. I'm Chief Legal Officer at Filer Law. I hold a certified in-house counsel designation and am experienced in real estate, regulatory, and commercial law. And I wanted to share that the information that I'm going to be sharing today is for knowledge and empowerment purposes only, and it's not legal advice. And I'm happy to be here with members of our team, our Chief Product Officer, Rodrigo Azevedo, and you've already met our Partnership Relationships Manager, Andrea D'Souza. But before we get started, I wanted to talk a little about who we are and what makes Filer Law different from traditional law firms. Filer is not just a law firm. We're backed by a tech platform that runs on AI. What that means is we have a dedicated account manager. So every client works with our customer success specialist who proactively guides them from intake to keys in hand. We have a tech-enabled closing platform, which means there are secure document uploads, real-time status tracking, and automated milestone updates, which simultaneously saves yourselves and clients time by not having to chase emails or paperwork. We have fast and accurate processing. Our AI-powered workflows reduce processing times by half while maintaining essential lawyer oversight and high service standards. So thank you for joining us, and I'm glad you're here because what we're about to discuss is not just an opportunity, but it's also a burden if misunderstood. And so what I'm going to be chatting about is the new HST rebate, as you know, and what you should know to protect your deals and your clients. And as you can anticipate, the information is quite dense, it's complex, it's multi-dynamic, and given that every deal is unique, the best way to approach this webinar, as Nicole mentioned, is to identify any aspects that are relevant to your current or prospective deals, make a list of questions, and then submit them during the Q&A segment of the webinar at the end. And so as of April 1st of this year, as you know, we now have a potential full 13% HST relief on pre-construction homes in Ontario. That's genuinely significant, and of course, all of our clients are already talking about it. But today, I'm not going to repeat what you've already seen online. Instead, I'm going to walk you through where deals can break, where clients can face unexpected cash exposure at closing, and where you as the agent must step in early. My job today is to give you the knowledge to protect your clients and to protect your deals. So what we'll be covering is how the program works and what the numbers actually mean, the critical pricing traps hidden inside purchase agreements, what disqualifies a buyer, the retroactive opportunity for first-time buyers from 2025, the critical dates and deadlines that every agent must track, anti-avoidance rules and what you absolutely cannot do, how the rebate gets applied and your role as the agent, the market impact and how this is changing the pre-construction landscape, as well as an agent checklist where I'll be sharing 7 steps for every pre-construction file. Also, please stick around because at the end of the presentation, we will have 3 Starbucks gift cards as giveaways from a short quiz, and the correct answers win. So stay for the full session, test your knowledge, and take the quiz at the end. All right, let's get into it. So I want to start with a quick foundation so everyone is working from the same facts. The HST on new homes in Ontario is made up of 2 components, a 5% federal portion and an 8% provincial portion, totaling 13%. Now, the GST relief for home buyers section of Bill C4 amends the Excise Tax Act to implement a temporary GST housing rebate for first-time home buyers. And so practically speaking, it eliminates the 5% federal GST component on newly built homes that are priced up to $1 million for eligible first-time buyers, with a maximum saving of up to $50,000 per purchase. So the rebate eliminates 100% of the federal GST on new homes valued up to 1 million. And then it's phased out on a straight line basis for new homes valued between 1 million and 1.5 million. Above 1.5 million, there's no federal GST rebate that applies. And so to be considered a first-time home buyer under the program, you must not have lived in a home that you or your spouse or common law partner owned as a primary residence in the calendar year of the purchase or in any of the previous 4 calendar years. You must also be a Canadian citizen or permanent resident. You have to be purchasing a newly constructed or substantially renovated home as your primary residence, and you must not have previously claimed the rebate in your lifetime. And the legislation deems the new provisions to have come into force retroactively on March 20th of last year. And the agreement to purchase and sale has to be entered into on or after March 20th of last year and before January 1st, 2031. Also, resale homes are not eligible since they aren't subject to GST in the first place. But for transactions closing after March 12th of this year, when the bill came into law, builders can credit the rebate directly on their statement of adjustments at closing, which effectively reduces the purchase price. For buyers who closed before March 12th of this year, but after March 20th of last year, the claim has to be filed directly with the CRA using the updated rebate forms, and there's generally a 2-year window to file after taking possession of the home. Now, with respect to the Ontario component, which is the bonus, Ontario had noted in their 2025 fall economic statement that they would follow suit of the federal government and remove their provincial 8% portion of the HST for first-time buyers on homes up to 1 million. Though that provincial measure has not yet received royal assent. And so, though, if the federal rebate is combined with Ontario's proposed rebate, first-time home buyers in Ontario could access the full 13%, resulting in combined savings that could reach $130,000. However, unlike the federal first-time home buyers rebate, though, Ontario's expanded rebate is eligible and available to all buyers, not just first-time purchasers, and it applies to qualifying residential rental properties. The key conditions for rental properties are the property must be rented out to a long-term residential tenant for use as their primary place of residence, and the purchaser must acquire the home for use as a new residential rental property. So, as a practical example, it could be that an investor purchasing a newly built condo with the intent to rent it out long-term as a tenant, as their primary residence, and not for short-term rentals like Airbnbs. And there's also an important nuance in this context as well, where the practical window for rental properties is narrow because construction has to begin and substantially be completed within approximately 3 years. And so that would pretty much limit the applicability of this relief to smaller scale projects. It's also worth noting that since the full legislative details haven't yet been released, some specifics around rental property eligibility could still change. And so a tax professional would be the best resource before making any investment decisions based on this. And lastly, the Ontario proposed rebate only applies to purchase agreements that are signed between April 1st, 2026 and March 31st, 2027, a 1-year period. So for the federal rebate only, which is currently law, rebate is not a flat discount for every first-time home buyer. It operates on a tiered system based on purchase price. And if the Ontario provincial rebate also passes, so it's not yet law, then the combined federal and provincial savings could reach up to $130,000, but only on homes priced under $1 million, and only once Ontario's matching legislation receives a royal assent, which again has not yet happened. So with that foundation set, I want to highlight an area where a misunderstanding can directly cause your client's money. And so it's worth slowing down here. So there's the pricing trap. So for roughly the past 2 decades, Ontario builders have structured their advertised prices by factoring in the existing HST new housing rebate that previously capped at approximately $24,000. And they credit it directly at closing. So basically what happened is builders collect and remit the HST to the CRA themselves. So buyers never really saw the rebate as a separate line item. It was simply baked into the sticker price. But as of April 1st of this year, the proposed maximum combined rebate jumped, which is a substantial change. But that shift in policy does not automatically mean a shift in how builders have priced or structured their agreements. And here's the critical issue. Some builders have updated their pricing and purchase agreements to reflect the new rebate structure, while some have not. And then some agreements may be ambiguous, whether deliberately or inadvertently, about how the rebate is being handled. This means if the Ontario legislation passes, your clients can't assume that a builder's listed price would already reflect $130,000 in HST relief. So before your clients sign anything, you need to know, does the purchase agreement explicitly state how the HST rebate is being applied? Is the rebate being credited at closing by the builder, or is the client expected to apply this to the CRA directly? Or has the builder's pricing actually been adjusted to reflect the new rebate amounts? Right? And in addition to that, I think there are two additional caveats that are worth keeping in your front of your mind. So again, the Ontario provincial portion of the rebate has not yet received royal assent. It's still proposed legislation. So the full $130,000 combined figure depends on both levels of government acting in unison. Secondly, eligibility conditions also still apply. For example, the purchase agreements have to be signed between April 1st of this year and March 31st of next year, and the home must be newly constructed. So not every transaction your clients are considering will qualify. The bottom line is that you need to read the builder's agreements carefully, confirm how HST is being treated in the pricing, and when in doubt, get it in writing and refer your client to a tax professional or a real estate lawyer before signing. So essentially, there are two questions that every agent must ask. So before your client signs any APS, ask the builder in writing, does the listed price already reflect the new HST rebate, the previous $24,000 rebate, or neither? And will the rebate be credited at closing, or will my client need to apply to the CRA directly? And this second question matters for mortgage agents specifically, because if the client has to apply to the CRA retroactively rather than receiving the credit at closing, it affects their cash flow and potentially their financing calculations. So I'll put this in a real scenario for you. Let's imagine there is an investor buyer, and you're working with a client purchasing a pre-construction condo as an investment property. The builder's listing shows a price that appears to already account for some discount. Your client assumes the full new HST rebate will apply and plans their finances accordingly. However, investors face specific eligibility requirements that differ from owner-occupiers. For example, to qualify, the property has to be intended for a long-term residential rental to a tenant as their primary residence and not to short-term rentals. And the rules governing how that intent must be demonstrated at closing are specific, and the Ontario provincial portion is not yet law. If the CRA denies legibility after closing, the builder structured their pricing assuming the rebate would flow back to them, then your client could face an unexpected significant cash tax liability on closing date. So ask yourself, at what point in that process would you have caught that? Right? And the answer for most agents is not early enough. So really that's what we want to focus on today. You know, your role here is not to give legal or tax advice, but your role is to audit the APS before it's signed and to confirm exactly what has and has not been factored into the price. And then if there is any ambiguity, to refer your client to a lawyer before they put pen to paper. All right? So in this next section, I want to talk about buyer disqualification. Most builder agreements are drafted assuming the buyer qualifies for all applicable HST rebates. And then at closing, the buyer again would typically assign their rebate entitlement directly to the builder. The builder would have already deducted it from the purchase price and handled the CRA paperwork. That's the smooth version. But here's what happens when it's not smooth. If the CRA determines that your client does not qualify for the rebate, the builder will come to your client for the shortfall at closing. And the most common reasons buyers are disqualified include not meeting the first-time buyer definition due to the 4-year look-back rule, or a spouse or a common law partner having a prior ownership history, or the property not being used as a qualifying primary residence for a long-term rental, or the purchase agreement being dated before March 20th, or the buyer not being a Canadian citizen or a permanent resident. So these are all the areas where disqualifications can occur. And further, the rebate shortfall cannot be rolled into the mortgage. So it's important to note that lenders will not advance any additional cash to cover it. So the buyer would have to have the funds available on closing day. And so depending on when the transaction and once the provincial legislation is finalized, the shortfall could reach quite significant numbers. And in cases where the buyer can't cover it, they may be unable to close entirely, putting their entire deposit at risk. So this is not a theoretical risk. It's a closing day reality that agents and mortgage professionals can directly help their clients avoid if you ask the right questions early enough. So as mentioned, here are the most common reasons why the CRA would deny a claim and the ones that may likely surface in transactions that your clients bring to you. So there's a 4-year look-back rule where the buyer or their spouse or common law partner must not have owned or lived in a home as their primary residence in the current calendar year or any of the previous 4 calendar years. There is the spouse or common law partner's ownership history. So even if your client has never personally owned property, their partner's history can disqualify the entire purchase. If the property is not intended to be a primary residence, the buyer has to intend to occupy the home as their primary residence at the time of purchase. As well, for investors who can't demonstrate qualifying for the long-term rental, face the same issue, but that would be through a different stream. The buyer has to be a Canadian citizen or a permanent resident, so work permit holders would not qualify. You would not have been able to previously have claimed this rebate. It's a lifetime, one-time entitlement. Or if the purchase was made through a corporation, the rebate applies to individuals only. Assignment sales. See, these carry significant risk because if the original purchase agreement predates March 20th of last year, an assignment that assignment doesn't unlock contract eligibility, regardless of when the assignment itself is signed. That's also risky. If the purchase price is above the threshold, no rebate applies. Failure to meet construction or occupancy conditions will also disqualify a buyer. So I'm going to give you an example of a couple more examples of how this can play out. Okay, let's just say in an assignment situation where the deal goes wrong. Imagine a buyer purchases a pre-construction unit in early 2025 and later assigns a contract to another buyer before closing. The final buyer, who is the assignee, assumes that the full HST rebate will apply to them and then plans their finances accordingly. However, there are 2 problems here. First, the original purchase agreement predates March 20th last year, which is the eligibility threshold, and assignment of that contract does not reset the clock. The CRA will look at the date of the original agreement, not the assignment date, when eligibility assessment is done. Secondly, even where the timing is not an issue, the assignee must independently meet every eligibility condition in their own right, including the first-time buyer definition, the 4-year look-back rule, citizenship status, etc. The fact that a rebate was factored into the builder's original pricing doesn't automatically transfer to the new buyer. So then the CRA denies the rebate, and then the buyer now owes the builder the full shortfall in cash at closing with no ability to finance it. The agent was not aware of the assignment-specific rules and had already reassured the client about the savings. So the lesson in this hypothetical is that assignment transactions require separate eligibility review from scratch for the assignee against the current rules based on the original agreement date. right? There's no assumption of transfer of rebate entitlement. And this is an exact situation where early legal review makes the difference between a clean closing and a potentially catastrophic one. Another scenario, let's just say there's a corporate purchaser. Let's say a client purchases a pre-construction home through their holding company, which is a common and legitimate asset protection strategy. But neither the client nor their agent flagged this as an eligibility issue. And the builder's agreement was structured assuming the HST rebate would be assigned back to the builder at closing. And the CRA disqualifies the claim because the HST rebate is only available to individuals. And then the shortfall becomes a cash liability at closing that the client had not budgeted for because no one reviewed the eligibility criteria before the agreement was signed. And this is a more preventable scenario. And the question then is, is your client purchasing as an individual or through a corporation? It takes seconds to ask, and the answer determines legibility entirely. So the lesson in this hypothetical is anytime a client mentions a holding company, a numbered company, or a corporate structure in the same conversation as a new construction purchase, review the eligibility before the agreement is signed and not after. Because in both of these instances, a lawyer reviewing the agreement in advance would have been positioned to flag it, and an agent asking the right questions early enough would have prompted that review. And so that's a standard that we need to hold ourselves going forward. So what should you be saying to your clients? The question is, and I would suggest, don't say you'll get the rebate. And instead start saying, we need to confirm your legibility before you sign, because if this isn't reviewed properly, it could become a significant cash adjustment at closing that we cannot finance our way out of. That one shift in language does three things. It sets accurate expectations, it prompts the right professional review at the right time, and it protects you if the transaction doesn't go smoothly. And for any mortgage agent specifically who might be joining us today, an unresolved rebate liability doesn't just surprise your client, it can unwind the financing entirely, as you know. So that makes this your issue too, and not just the realtors. Now I want to shift to something that represents a genuine opportunity and one that not many agents are practicing or aware of. Under the federal legislation, the first-time buyer GST rebate applies retroactively to agreements of purchase and sale that are signed on or after March 20th of last year. So that means first-time buyers who signed pre-construction agreements more than a year ago may now be entitled to relief up to $50,000, which is much more than the previous approximate $6,300 federal portion that they would have expected to receive under the old rules. Whereas the Ontario provincial component for the same retroactive window would bring the combined relief closer to $130,000 if qualified. So it still requires federal regulatory amendments before it becomes available, but these are two distinct components running on different timelines, and it's important not to conflate them when speaking with your clients. So the practical opportunity for you right now is if you have first-time buyers who signed pre-construction agreements between March 20th last year and March 31st of this year, the federal entitlement is already law. So before you make that call, since many of them may not know it yet, keep two things in mind first. All standard eligibility conditions still apply. Second, buyers who took possession before March 12th of this year will need to apply directly to the CRA to claim the rebate retroactively rather than receiving it as a closing credit. So this is a proactive outreach moment for you. Review your 2025 pre-construction files, identify your first-time home buyers in that window, get them in front of a lawyer or a tax professional to confirm eligibility, and don't wait for them to figure it out on their own because, frankly, many of them won't be able to. Now, in terms of the critical program dates, there are two distinct programs running on different timelines, and keeping them separate is essential for your own understanding and for the advice you give your clients. So for the first stream, which is a federal first-time buyers stream, which is currently in force, the retroactive start date is March 20th of last year. The agreement must be signed before January 1st, 2031. Construction must be substantially completed before 2036, and it applies to first-time buyers only on newly constructed homes. For the second stream of critical dates that relate to the proposed Ontario legislation, the APS has to be signed between April 1st of this year and March 31st of next year. Construction would need to begin on or prior to December 31st of 2028. The home must be substantially completed by December 31st of 2031. And it applies to all eligible buyers, including investors purchasing for long-term rentals. Now, the deadlines in both programs are legislatively fixed, and missing them would virtually result in disqualification. And as far as we know, there's no mechanism to extend them after that fact. So again, the date that most agents are not yet thinking about is that March 20th date from last year, the retroactive federal eligibility date. If you have first-time buyer clients who sign pre-construction agreements after that date, their eligibility window should already be underway. So build that date into your client review process immediately. So now I want to address something that's been coming up. And clients are asking, for example, can I just cancel my existing agreement and re-sign it so I qualify for the new rebate? And of course, some agents have been wondering the same thing. The answer to that is no, categorically and unambiguously no. And the reason for that is Ontario has an anti-avoidance provision in its tax legislation. And if the CRA determines that an agreement was canceled and re-signed for the specific purpose of accessing a tax rebate, the buyer will be disqualified entirely and actually may face financial and legal consequences. So don't suggest this to a client, don't facilitate it, don't discuss it as an option at all. Just see your job as to work within the rules of the program as they exist, not to find workarounds, because anti-avoidance rules exist precisely to prevent this kind of maneuver, and the CRA does look for it. So I'm going to walk you through the three ways this rebate gets processed, because the rebate flows depend on the timing of the transaction, and it affects what your clients can expect at closing and what you should confirm before they get there. So the first way would be through the builder at closing, and that would apply for agreements that are signed after April 1st this year and up to March 31st of next year. So for clients signing new agreements within the Ontario expanded rebate window, the builder can manage the process directly. They can coordinate with the CRA, handle all the paperwork, credit the rebate as a line item, and that reduces the client's final closing balance. That's the cleanest route when it works. But again, given that not all builders have updated their agreements and processes to reflect the new rebate amounts, don't assume that this will happen automatically. Confirm that it is explicitly addressed in the agreement before your client signs. The second method can be directly through the CRA. And that's where a builder crediting is not available or that just hasn't occurred. And this is where the builder is not processing the rebate, either because their systems haven't been updated, or there's a dispute about eligibility, or the structure of the transaction requires it. And so basically in that instance, the client can apply directly through the CRA My Account portal. The important caveat in this instance is that the client must pay the full HST upfront at closing and wait for the CRA to issue the rebate afterward. And there's no published processing timeline, so clients using this route need to plan their cash flow accordingly. Also, there's a 2-year filing deadline from the date of possession, and it's not an open-ended window. And then last method is the retroactive CRA application for first-time buyers only. And that's for first-time buyers who signed between March 20th of last year and March 31st of this year. So at that time, when they signed, legislation wasn't in force yet. So the clients would have to apply directly to the CRA to claim their rebate after the fact. And in those instances, the documentation requirements are quite specific, and errors can delay or forfeit the claim entirely. And the 2-year filing deadline clock is already running for anyone who took possession in 2025. So those clients should be directed to a lawyer or a tax professional before they attempt the application on their own. So Those are the most time sensitive outreach opportunity. And if your clients are in that window, the conversation needs to happen now. With that said, I just kind of want to take a step back and consider the broader business context here, right? So for years, pre-construction carried a perception of extra cost and risk compared to resale. The combined effect of the federal rebate, which is now law, and the proposed Ontario expansion has significantly shifted that thought process, right? And now pre-construction is now substantially more competitive, particularly for first-time buyers who can potentially layer multiple programs together. So for example, think about what a qualifying first-time home buyer may now be able to stack. The home buyer's plan, first-time home savings account, first-time home buyer's tax credit, federal GST rebate, and then the proposed Ontario HST rebate. And so when all of those programs are potentially stacked together, the combined benefit could be quite significant. And this is fundamentally different from conversations that agents were having with first-time home buyers 2 years ago. But then there's a flip side to that, because as awareness of the program spreads, so does misinformation. Clients will have seen things on social media posts, YouTube videos, headlines that oversimplify the rules, and they'll expect the full savings automatically without understanding eligibility conditions, program timelines, or the distinction between what is law and what is proposed. And so your job as the agent is to be the credible, accurate voice in that conversation and in their thought process. Not the one who repeats the headline, but the one who says, here's how it actually works, here's what applies to your specific situation, and here's what we need to confirm before you act. Because agents who understand this program at that level will close more deals and protect more clients, whereas agents who just repeat headlines without understanding the details will inevitably create problems for clients and for themselves. So with that said, I'm going to close with a practical checklist and steps that you should be applying on every new pre-construction file starting today. Refer your client to a qualified real estate lawyer before closing and not after. This is the most important step on this list. Legal review before execution and not at closing. Everything else on this checklist will flow from getting this one right. Secondly, confirm the intended use and the ownership structure. Is it a primary residence? Is it an individual or a corporate entity? Is assignment involved? Is the investor purchasing for long-term rental? Catch that at the first client conversation, not at the signing table. Audit the builder's sticker price in writing. Ask before your client signs, does this price already reflect the new HST rebate, the previous $24,000 rebate, or neither? Get the answer in writing, because this single question can prevent a significant surprise at closing. Confirm eligibility. Don't assume anything. Use specific language with your client. Say, we need to confirm your eligibility before you sign, because if this isn't reviewed, it could become a significant cash adjustment at closing that cannot be financed. Set the expectations early. Confirm how the rebate will flow at closing. Will it be a builder credit at the statement of adjustments, or would it be a direct CRA application? Know this before signing this, because if it's a direct CRA application, your client would need to plan their cash flow accordingly and understand the 2-year filing deadline. Review your existing client list for the retroactive federal window. Remember, the first-time buyers who signed agreements between March 20th last year and March 31st of this year may be entitled to federal GST relief up to $50,000, and that's already law. Now, the Ontario provincial component is still pending, but call those clients now anyways. Don't wait for them to figure it out on their own. And also, lastly, never suggest canceling or re-signing an agreement to qualify. Anti-avoidance rules apply to both federal and provincial programs, and structuring or restructuring a transaction to manufacture eligibility can result in full disqualification and potentially exposure professionally as well as to the client. And this is not a gray area. So here's what I want you to walk away with today. Don't treat the HST rebate as a simple discount. Treat it as a legal entitlement that must be confirmed, structured correctly, and protected for every client on every pre-construction file. The opportunity is real. The federal rebate is law. The Ontario expansion is proposed and moving forward, but the risks exist and they land on your client if no one catches them early enough. Your value in this market is not just finding the right property, it's knowing when to ask the right questions, identifying the issues before they become crises, and connecting your clients with the right legal and tax professionals at the right time. Some of what was presented today is still moving through the legislative process, so stay current. And the agents who track these changes as they happen and who bring that knowledge to their clients are the ones who will build the kind of trust that generates referrals after the long transaction closes. So if you have any deals that are currently in progress or deals where clients sign pre-construction after March 2025, now's the time to review them. Don't wait until closing. We're here to support you on every one of those files with APS reviews, eligibility assessments, risk flagging, structuring and guidance. This is what we do at Filer. So please reach out to our office directly and let's make sure your clients are protected. And now I'm going to pass the mic back over to Andrea D'Souza, and she'll introduce our partner program designed for realtors and mortgage brokers.
Thank you, Natalie. We have this exciting opportunity for realtors and mortgage brokers to partner with us for their clients' closing. When your clients choose Filer, we take $100 off their legal fees, which is already competitive. For teams and brokerages, the discounts are much higher. Please reach out to us after this presentation to discuss that. As their realtor or broker, you also collect reward points that can be redeemed for gift cards or vacation packages. There are 3,000 points when you sign up, and for every referral, you will earn 1,000 points after. After your second referral, you'd reach 5,000 points, which can be redeemed as a $500 gift card. Please scan the QR code or access partners.filer.ai to earn 3,000 points today. We will stay on the slide for a minute before moving on to the quiz section and then to the Q&A section. All right, I think that should be good. Okay, so we do have a few engaging questions, and we would love if you could participate. We have a series of 3 questions, and we ask that you use the raise your hand button. We will then ask someone, Nicole, if you are able to randomly pick a participant from whoever raised their hands and ask them to unmute. If they do select the correct answer, they will be awarded a Starbucks gift card. And if it is the wrong answer, we will pick another participant as well. So let's get started. I will read the first question. All hands must be lowered. Once you have your answer, please use the raise your hand feature, and Nicole will select someone from So the first question is, assuming the Ontario legislation passes, if a client is purchasing a new pre-construction home in Ontario for $1 million as their primary residence, after the new HST rebate is applied, approximately how much HST will they still owe out of pocket at closing?
All right, so G, you put your hand up first, so we'll go with you. If you can unmute. The label is G, a lowercase g. Yes, perfect.
Hello, can you hear me?
Yes.
77,000 approximately.
Unfortunately, that is the wrong answer. So we're gonna go with another person.
All right.
Approximately 130,000.
Sorry, you had to guess it. Let's go with Akhtar.
It is E 130 approximately.
Unfortunately, that is the wrong answer as well. I think we're getting closer. We'll try one more person.
Okay, next up is Prath Patel.
Yeah, hi. So that would be a 0
Correct.
to
A.
Yes, correct. Okay, so I'm gonna ask you to please leave your email in the chat so we can send you your gift card.
Sure. I'm in Starbucks only.
Oh, amazing. Amazing. So we'll send that to you shortly so you can pick up a sweet treat for yourself. All right, we're going to move on to question 2. So we have our winner for question 1. Okay, so for question 2,
I'm just gonna jump in. I noticed a couple unmuted. If you can just mute yourself again, just so that we can keep the flow going. Thank you.
thanks so much, Nicole. A client wants to buy a new pre-construction condo through their holding company for asset protection. The builder's agreement.
Sorry, Andrea, you're on mute.
Oh, sorry. Can you all hear me now?
We can, yes.
Oh, apologies. So we have question 2 on the screen. A client wants to buy a new pre-construction condo through their holding company for asset protection. The builder's agreement assumes that the buyer will assign the HST rebate to the builder at closing. What happens?
All right, the first up was Ayush.
I think it's going to be C. The CRA disqualifies the rebate and the shortfall is owed in cash.
Correct. Can you kindly leave your email in the chat as well so we can send over your Starbucks gift card?
Perfect. Thanks.
Thank you.
All right, now everyone's hands down. Please.
Perfect. We're gonna get to our last question for the quiz.
Just 1 second. If everyone could put their hands down, just so that we make this fair. Thank you, everyone.
Okay. Question number 3. So question number 3 is a first-time buyer signed a pre-construction agreement of purchase and sale on September 15, 2025. Under the new program, what is true about their HST rebate?
All right. So Bassam.
Should be B.
Correct. Perfect.
Awesome.
Kindly leave your email in the chat, please, so we can send your Starbucks gift card.
All right, thanks.
All right, that's amazing. Thank you so much for participating in our quiz. Okay. So thank you again, everyone. This will wrap up our segment today in our webinar, but I really wanted to thank everyone for taking the time to join us today. We hope you found this session engaging and interactive. We host webinars regularly with topics evolving based on current market trends to keep things relevant and valuable for agents. We'd love to have you join us for future sessions as well, which we run on a monthly basis. If anything comes up after the session, if you have questions after the session, please don't hesitate to reach out to us. We're happy to help. A walkthrough of our platform.
So, hi, Andrea. We still have the Q&A session.
Sorry?
We have the Q&A session.
We do have the Q&A session after this. Yeah. So
Yeah.
we can get into that as well. Yeah.
Awesome. Okay, so let's go from the top, and I will obviously whoever can answer it, that would be great. For all of our agents, if you need clarity on the responses, just put them into the chat. So we'll start with the first one. In Ontario, HST rebate for all home buyers, new home, but on the other hand, federal government giving GST rebate for first-time home buyers only. How does the HST rebate work for all time home buyers? So I'm assuming first-time home buyers. So here, let's just segment. Does the first-time home buyer rebate also apply when you're applying the HST rebate?
So the answer to that question is yes. Like, assuming that the proposed legislation for Ontario ends up passing and becoming law, then the additional 8% would be eliminated. So as opposed to the current 5% being eliminated for first-time home buyers based on the federal legislation, which is currently law, it could be an increase of 8%, which is a total of 13% for first-time home buyers.
Perfect. Thank you. All right. So next, if there are two buyers, both are not first-time home buyers on the agreement, and among them, one will be occupying as a primary residence and the other a partner, to support financially, does this still qualify for the GST and HST rebate at closing?
It sounds to me, just based on the first fact mentioned, the answer would be no, they would not qualify.
Okay. Next question. Is the new rebate applicable on custom houses built on an owned parcel of land where the clients own the land?
Great question. Based on my understanding, that would fall within a new construction definition, but I think that's might be a more nuanced. There might be a nuance there that might be worth looking into in more detail. I would gladly invite the asker to submit that question to me, and I can take a closer look just to see if there's any kind of exemption or any kind of carve out that exists for pre-existing privately owned land where a new construction a custom home will be built on, as opposed to a development project.
Awesome, thank you. All right, next question. How is long-term defined? I think this is more of a nuanced question.
Yeah, very nuanced as well. I think the best way I can sort of at a high level distinguish it is, so it would have to be, you'd have to be able to demonstrate the intent from the outset for it to be a long-term rental, purchased as a long-term rental property. So it could be that, first of all, you definitely already have your own, the pre-existing, you already reside in your own home. Or you have, in addition to the purchase, maybe the purchase agreement as well, ideally could have some clause in there that indicates that it's intended to be rented or leased to a tenant on a long-term basis. I think that's another indice of being able to demonstrate that intention to the CRA. And the flip side of that is, for example, Airbnbs, short-term rentals, which don't require any such type of evidence, would not be eligible. And that's how you can distinguish between the two. Having something in writing, in particular in the APS, that indicates the intent for the purchase to be used as a long-term rental.
Okay, thank you. That's clear. Okay, next question is there a possibility that Ontario proposed law doesn't become law for all buyers from April 1st, 2026 to March 31st, 2027? And second part to that is there a possibility that Ontario doesn't follow through with the March 20th, 2025 first-time homebuyer rebate for the provincial portion? So I just want to be very clear, the first-time homebuyer rebate has already been passed and is legislation. But jump in if I'm incorrect to our solicitor team. So I think, well, let's focus on the first one. What happens if it doesn't actually become law, which I think you've touched on many a times, but maybe we can just sort of capstone this.
Yeah, no problem. So I could say that I'm tracking it and it's reached second reading. So it's moving forward to become law. I think at this point in time, it's likely that it will progress to full completion into law based on the stage that it's at right now. But taking your question to its full conclusion, if it doesn't become law, if something happens at the stage going forward, then only the 5% rebate would apply. And that would be the federal legislation that's already in effect.
Perfect, thank you. Okay, so the next question is, the client has never lived in the property since purchasing it and has rented it out for over 5 years. He is now looking to buy a home for his use as his primary residence. My assumption is you're asking if the HST credit applies here.
So could you repeat the beginning of the question? So the client
has never lived in a property that is owned, but it has been rented out for over 5 years. He's now looking to buy a home to use as his primary residence.
Yeah, so this sounds like someone who would qualify. So if I understand the first part of the question correctly, essentially the person was renting for 5 years.
Correct, yes. Or they had a property. They had an owned property, but it had been rented. So it wasn't used as primary.
Okay. Based on the time frame of the minimum 4-year look back, having already been exceeded within the 5-year period, assuming that there's no other disqualifying factors that are not brought up, and again, this is case by case, just on the face of those facts, the person would be eligible.
Okay.
That requires further investigation, though, just to ensure that there's no other
Yes.
features.
But on that note, may I ask, in this particular question, just to elaborate, even if this was not, but the other rebate may be available, that is to everyone, right? Not the first time buyers, but everyone who signs a new APS as of April 1st, 2026 should be eligible, right?
Yes.
Assuming that they're using that as their primary residence, if it is an investment property.
Yeah.
Yeah. All right. There are a couple questions here for our presenters. I will flag them. They're very specific, and I think in light of our time, they are example and scenario based. So I will flag those for you, and to our agents who ask the questions, we'll make sure we get back to you with those. So not to worry. Next question here. Is it true for investor buyers the construction must begin before March 31st, 2026 for use as a residential rental property, and the purchase agreement with the builder was signed between April 1st, 2026 and March 31st, 2027? Construction is substantially completed on or before December 31st, 2029, which is different from an end user buyer.
Excellent question that I would want to comb through and verify the dates before answering that. I think that falls into the bucket of if we can include that in the questions that will be submitted. I'm happy to review that and get back to you.
All right. Thank you. So there's a couple of questions in this chat about what's the timeline on this proposed HST credit. And as we've identified a few times in this, and I'm sure you've heard, it's not legislated right now, and it's proposed. We look forward to it being enacted. So if you have buyers that are looking to purchase pre-construction, to the points that were made earlier in the presentation, they have to be prepared. You have to be educating them properly that it's proposed right now. It's not there, even if builders are marketing and potentially putting agreements of purchase and sale together in the aspect of it being enacted. I don't know if you guys want to comment more on that, but that is that. Yes, we are recording this, so not to worry. Everyone is getting the recording following this presentation. All right, that wraps it up. Thank you, everybody, for attending. We had some really great engagement on the call today, and we really, really do thank everybody for coming on and engaging and submitting your questions. These are all really great questions that will be an evolving conversation as we move forward and as we get more clarity from our government bodies, from the CRA, and we get an equilibrium of sort within the industry of builders that will all, moreover align in a standard process. But really echo the sentiment. I think you said it absolutely perfectly, Natalie. Make sure you understand that agreement of purchase and sale with the specified builder that you are working with so that you are educating and steering your clients in the right way. And with that, we will give you back your afternoon. Thank you for joining us on this rainy Wednesday. I have to say, every day we do a training session, it is raining, so that's perfect. Because really you're not going to be doing a whole lot in the rain, so this is perfect time to have a learning session. So thank you, everyone, and enjoy your day. And thank you so much for our presenters. You guys are always great. And I do want to encourage everyone, if you don't have a preferred legal team, definitely connect, reach out. They are a wealth of knowledge, and they are very open and transparent to sharing the knowledge that they have. So thank you, everyone, and we will see you on our next training session.
Thank you, Nicole. Thanks, everyone, for joining. Enjoy your day. Take care.
Thank you.
Bye.